All right, well, I think it's a good time to get started. Hello, welcome to Lil Roberts' webinar, Mastering the Power of Three, Accounting Strategies for Your Business Success. Lil prides herself on building customer-centric companies built on teamwork, technology, and integrity. She is a serial entrepreneur passionate about small businesses and is known as an innovator with an ability to foresee market trends. After a successful exit from the manufacturing industry, Lil serves as CEO and founder of Xendoo, a VC-backed cloud-based fintech company based in the greater Miami region. This will be a quick presentation, so we will be holding a Q&A at the end. So if you can hold your questions until the Q&A portion of today's webinar, that will be very much appreciated. Thank you for joining us, and over to you, Lil.
Thank you, Allie. Pleasure to be here. Hello, everybody. I'm excited to share with you some Fortune 500 strategies that work for small businesses, right? And when we talk about small businesses, we're talking about anything from a side hustle that's doing $100,000 a year in revenue up to $50 million. Those are considered small businesses by definition. And the Fortune 500 companies that love to employ the power of three to help build their bottom line exponentially, we're going to chat about that today. So pleasure to be with you. Excited to hear your questions after we finish the short presentation. So who are you? First, let's talk about businesses, right? So businesses, for the most part, fall in two buckets. Either you sell time, a professional service, or you sell a product, right? And so professional services can be anything from, architect to attorney to a doctor really sells time. They sell their time for diagnosis. IT services, digital marketing agencies all fall into professional services. So really professional services is a bucket that's huge, right? It covers a lot of area. And then people who sell products can be same thing. It could be anything, going to a fast casual restaurant could be a product, going to the local gas station that has a mini mart in it, you're buying a bottle of water is a product, or just a retail shop that's a boutique shop selling ball caps and sneakers, all products. And some are brick and mortar, as we know, and some are e-commerce businesses. So, but both of those businesses, there are ways to exponentially build money to the bottom line. So a little bit about profits and cash flow. So according to US Bank, 93% of small business owners run their business from their bank account. And it's been proven. Xero and QBO, they know what time the business owners are logging in and looking at how much money they have. And banks know that typically business owners are logging in between 7 and 8 a.m. in the morning to see how much money they have. 82% of the businesses that close are actually profitable, but they mismanaged their cash flow. Either they had too many receivables on the street or too much inventory, or they didn't understand the profit margin that they thought that they were getting on their product. And we'll talk a little bit about that later. And of the 82% of the businesses that failed that were really profitable, they just ran out of cash flow. There are 46% of the businesses that it's a systemic issue. It's pricing, it's system and processes, it's non-payment of taxes, it's record keeping, excess expenses because you don't have good visibility of what's happening in your business. So a couple of things to cover. Profits are not cash flow. They will be one day. So what do I mean by profits are not cash flow? Profits are after all the expenses have been paid and you've paid for your cost of goods. That's the money that you're going to pay the IRS a portion of for your federal income tax. But sometimes your profit sits on your balance sheet. It's sitting there in inventory. It's sitting there as deposits somewhere. And so it's not there for you to run your business. You need cash flow, which is the oxygen of your business, in order for your business to be able to thrive, for you to invest month over month, because there's always an investment, whether it is human capital, right, that you need more people so you can build your sales more, or you need more product. All of those things require cash flow. And so there's a difference between profit and cash flow. A lot of people don't realize that. because they think that, oh, I have cash flow, my business is okay. But if they don't really understand the profitability, then there can be some challenges. So if you understand your profits and you know your profits, you know how much profit you should have, then you're going to understand your cash. Industry metrics. One of the things that we share with our customers are that there's certain industries that have certain metrics, right? Restaurant is going to have a low cost of wages, but they're going to have a high cost of food. And then conversely, professional services business are mostly going to have no cost of goods, but they're actually going to have their labor costs. So their labor costs are going to be much higher than in other industries. So knowing your industry metrics, which is super easy to get on Google, is very helpful. Profit and loss statements, P&Ls, they help predict your profit and your cash flow months in advance. So think about profit and loss and balance sheets, or income statements, as profit and loss is also called. Think about that as a look back. That's looking how you did last month, last quarter, last year. And then when you do budgeting and modeling and projections, that's a look forward. That's saying, if I can do this, my business will be this, and I will have this much profit. And so you really need both. You need to have what you actually did, right? I always say, know where you came from to know where you're going. So the P&Ls are giving you that health check of where you've been, and it's going to help you to forecast and predict where you're going and how much cash you're going to need. And then make your business easy. Focus on 3 KPIs. Pick 3 KPIs and understand and watch those 3 KPIs. And that's going to help you not have to be fragmented and just distracted in what you're looking at to focus on the main thing in your business. And that changes as your business matures. So when you're just starting out, those 3 KPIs may not be the same 3 KPIs that you're going to focus on in the next stages of your business. So let's get into the power of 3. I love the power of 3. So there's a couple different ways to do the power of 3, right? But at its core base, the power of 3 is you're going to increase something by 3% while you decrease something else by 3%. And the result is not 6% or 9%. It's not 3 plus 3 or 3 times 3. It's actually exponential. And we're going to go into that in a couple of examples here. So what do I mean by increase your prices by 3%? Say you're selling a bottle of water, right? Somebody walks in and you're selling a bottle of water for $1. Sell it for $1.03. Actually, you'll sell it for $1.05. They're not going to walk out of your store for that. Or even if you're selling a ball cap, and a ball cap is $30, and now you're going to add 90 cents to it, or $1, you're going to round up. They're not going to walk out of your store over $1, right? So increase by 3%. It is so small and negligible that your customers won't walk out of your store, or they won't click off to another place to buy their product. How do you decrease your cost by 3%? Lots of ways. So we're talking about product right now and increase prices and decrease, but as we get into our examples, I'll give you additional ones. Decrease your cost by 3%. So what we see lots of times is that when businesses may not be ahead of their inventory of ordering product in a product-based business, is that now they'll have to ship something on a 2-day or 3-day shipment instead of on a ground shipment. Or if they're not well-versed in how much cash they have in the bank to be able to make business decisions, then they may not take advantage of a closeout inventory that you could buy hats that people will still buy and for a lower rate. So lots of ways that you can get creative to decrease your cost by 3% when you focus on it. My background, as Ali mentioned, my background was I was in manufacturing, and in accounting. I'm not a CPA or an accountant, but by owning my own business, much like all of you guys that are listening, you have to wear a lot of hats. And so I wanted to change the way that accounting was done so we could level set the playing field for small business owners to where they get a call back and they can understand their financials and they have the tools they need for visibility to make these decisions to increase profitability. So if we look at other ways that you can do the power of 3, you can increase production by 3% while you're decreasing the hours worked. So if you're a professional services and say you're IT management, right? How do you increase your production by 3%? How do you give your people the right tools so they could do more with less time. Say you're a retail product business and you every day open your store from 8 o'clock to 8 o'clock. And you bring in 2 team members and your store is open 30 days out of the month. And you bring in 2 team members every morning at 7 o'clock to get the store ready to open. And at night, you have 2 team members to close the store down. Well, what if you staggered those team members by half an hour and you have one person that comes in a half an hour later? That half an hour equates to 15 labor hours in a month. So it equates to dollars. And if you have more than that, just apply that across a multiple in your various departments in your company and as you look at production. Decreasing hours worked by the one example I just gave you. Another example is if somebody is professional service business, all of our team, right? We operate in that space. We're a technology company that happens to be in the accounting space, but all of our team members have 3 monitors because there was a study that people are 30% more efficient when you give them 3 monitors. So all of our team members have 3 monitors. What's an investment for an extra monitor? $125. You're going to get that back, tenfold, 100-fold. So you can decrease hours worked by 3% through a couple of different ways. Third category, third bucket for this is increase efficiencies in your business. So maybe it's about retooling some of your equipment, right? If your equipment is used to manufacture something, or you are, a sub shop and you're using an older, lunch meat slicer, right? And you buy a new product that's more efficient, that's going to come back. That's an investment in your business that's going to increase your efficiencies. And then decrease fixed expenses by 3%. Highly recommend that you look across your business, and we do this every year. We all live in a technology world. We're all on technology right now as we're doing this webinar. And how many extra seats of software do you have, or what software that could be replaced if you looked at it and say, hey, we should probably cancel these 3 softwares and buy this other software, and probably there's some type of money that's sitting there that you would be able to put to your bottom line. So decrease your fixed expenses by 3%. Look at your rent. Can you renegotiate your rent? Look at your loans that you have. Those are fixed expenses. Your software is really not a fixed expense. It's a head cost, but it can fall into fixed expenses because it's part of your infrastructure to run your business. So lots of ways when you think about 3%, it really falls to the bottom line. And we're going to go through 2 examples here. So the first example, a retail product store, right? A boutique store. Let's just take an average boutique store selling jeans or ball caps or sneakers, whatever you like that they're selling. We see them everywhere. And this particular example is that this shop owner has a revenue of $1,253,000. And by increasing their pricing by just 3%, just small, it brings in $1,290,842. Now, the only other thing that we're going to do to decrease by 3% is we're going to look at cost of goods sold, and we're going to say, can we buy better? Can we lower our cost of shipping? What can we do? Can we get terms that because we have cash and we can pay net 10 and we pick up 1 point there, there's 30% of the 3%, right? It's 1% out of the 3. And so what that's going to do is if you look at your gross profit from 434 in the original to 496, you're capitalizing on $62,000 that you've been able to optimize your business. And now we didn't touch salary and wages, we didn't touch G&A or rent. And what we've done is by taking the profit from 174 to 236,000 by increasing it 64%, it's actually a 36% lift in net profit. That's huge, right? And imagine if you're a $4 million or $5 million business and you just employ this one principle out of the 3 buckets we talked about, just the one principle of increase, your revenue and decrease your costs. Now, if we layered in a few others, this could be 80–90% that you would see that you've increased profitability. Let's take a time-based industry. Let's take, somebody who's selling time, say it's a digital marketing company, and say they're just getting going, they're out there at, $600,000–700,000. So here, if we apply the same thing where we're going to increase the sales price by 3%. So think about a digital marketing company that is selling social media posting for $1,000, a month. They're going to now charge $1,030. Is somebody really going to leave them over that? Or they're charging $1,500. Now they're going to charge $1,545 or $1,550. If a customer is leaving over that, then they're not the right customer for you, because they should be buying not on price, but on value and on the expertise you bring them, right? So in this example, it's a smaller business, about half the size. Just on that top line, we're going to increase that $21,000. And now if we take the salary and wages, right, and we say, okay, how do we decrease how much time it takes us? So we employ 3 monitors. Maybe we employ an AI accelerant like ChatGPT or Claude. Maybe we bring in additional software that cuts time to help them produce more in less time. So any of those areas, and there's 10, 20 different examples that you can do there. And so now here we just trimmed off $12,000. So now we have $33,000, just under $33,000 in this example on $252,000. And we just increased the bottom line here by 13%. So exponential, right? Product businesses, much bigger exponential, also a bigger business. But you apply this across the same way for a business doing $1 million, $2 million, $3 million, and the numbers become very meaningful. So, and we'll take questions on this. We have a couple more slides, and then we'll go right into questions. So let's talk about some tax tips, tax savings, right? One that we see overlooked quite a bit is we see that people will leave the shoreline to start their business, and they'll start out as an LLC. An attorney will advise them, or a friend will advise them and say, hey, you need to be an LLC. And LLC is a legal entity type of a business, but there's a second piece of that, and that is what tax type you are. So if you're a single member LLC, you're automatically going to file what's called a Schedule C on your 1040. And what that means is that on every dollar of profit that's earned, it falls to you personally, and you're responsible to pay Social Security. And when you own your own business, you pay both sides. You pay the side that is taken out of your check, 0.0765, right? And you take the side that the employer matches, 0.0765. So there's 15.3% that's taken. And so what happens is we see business owners where they'll leave themselves as a single member LLC or a multi-member LLC where they're filing a 1065. And what you want to do is you want to be an S election or you want to be a 1065, but you only want to take a reasonable salary. The IRS has reasonable salary categories for businesses. And so you basically want to take a salary of $40,000. So say your business all in, besides taking your salary and the profits it makes, and say you're a single member LLC, that $100,000 is now subject to 15.3% of Social Security and Medicare, not income tax. We're not even getting income tax yet. We're just in Social Security and Medicare. So that's $15,000 that you would pay the government just in Social Security. If you file an S election, a couple $100 to file an S election, have a CPA file it for you. And when you file an S election, pay yourself a reasonable salary, say $40,000. Now you're only paying 15.3% on $40,000. You just saved the 15.3% off the other $60,000, which is well over $9,000 of savings right there. So you just made $9,000. If you're not an S election or a 1065, you just made $9,000 by being on this webinar today. So you want to pay yourself that way. And then, of course, there's tax planning things that you can do to minimize how much you're paying Uncle Sam for taxes. And an example of that is, say you're a pizza shop owner and it's October your business has $150,000 in profit, or let's go back to 100,000, easy round numbers. So your business has $100,000 in profits. Chances are you're going to pay the government 30% of that, and your tax bill for IRS income tax is going to be roughly $30,000. So you're essentially taking out of this pot of money, right? That's the profits of the company, and 30,000 is going to the IRS, which is not going to invest in your business. Say you have this pizza oven that every 6 months you're putting $5,000 in for repairs, but that pizza oven is just getting worse and worse. Knowing that you have the profit there and that you're going to have to pay the government that money, you could go out and buy a new pizza oven, which they run about 50 grand. And now when you pay for that pizza oven, because you're going to file Section 179, you're going to be able to pull that right off the top of your profits, and you're going to lower your taxable income from $100,000 to $50,000. And now 15,000 of the 30,000 that you would have been paying the IRS is now just been made as an investment in your business. So you can grow your business and not have to pay $5,000 every 6 months to repair it. And industry specific, there's all kinds of industry specific tax savings, R&D credits. So industry specific and credit and deductions fall into about the same bucket, but there's certain things based on your industry that there's tax benefits for you. And then there's credits and deductions from certain, if you hire veterans, if you hire people that are disabled, R&D credits. So all kinds of things that you can do just by focusing on it to save money. And so we're at the end. We're ready for some questions. We're happy to help you. We offer a free 30-minute consultation. Feel free to come to our website, Xendoo, Xendoo.com, and fill out, schedule a consult and talk to one of our wonderful sales teams. All right. Happy to answer questions. Ali, back to you and see if we have some questions.
Yeah, great presentation.
Thank you.
Everyone, if you would prefer to ask your question verbally, you do have access now to unmute. I know sometimes asking questions verbally is quicker and easier rather than typing. Manuel, I see you're unmuted. Do you have a question?
Yes, but give me 1 second. Let me think about it and I'll
Okay.
ask.
I see Rachel's unmuted.
Yeah, I have a quick question. We are in a professional service field, healthcare specifically, with fixed rates, reimbursement rates that are fixed by the government and, big insurance contracts. Would you just recommend shifting the 3 to like 3 cost-based, efficiencies, or what? We feel stuck, we can't move the needle on the revenue side, but I assume you would just say, switch to costs, or
100%. So great question, Rachel, and thanks for joining today. So I would look to see if you can have some efficiencies in your workflow processes that would increase production, right? So if you're currently doing, for even round numbers, say you're doing 10 customers a day, 10 patients a day, are there efficiencies through the workflow system that you can do 12, right? So where can you cut minutes in the day to allow you to see more patients? And then on the other side of it, where can you decrease some of your fixed expense overhead that would be meaningful? And so that can be, so a lot of time is spent in a medical practice, verifying benefits. And there's all kinds of software platforms that allow you to do some of that, through computers, right? To do that. Or if you guys are finding that you have to call back on certain things with certain types of insurance, like United Health or Humana, and it comes down to the code, like look at those areas in the business, and that's going to be where you're going to find so it's workflow and process.
Thank you.
Thank you. I hope that's helpful for you.
Yeah.
Manuel? Did we lose him?
No, I'm here. Hi, Liv. How are you?
I'm doing awesome. How about yourself? Sorry for
I'm
the
good.
background noise. I don't know what's going on. They're doing something outside the building.
Honestly, I don't hear anything, so that's fine.
Perfect.
I don't know. It's a question, but I'm not too sure if this is 100% related to what you just explained today. But I have a service business that I'm about to acquire. I'm actually in the process of doing the acquisition, and I was actually thinking of having another like a holding company that is going to own this business, and I'm going to be working for the holding company as the manager to run this business. I guess my question to you, is there any savings by doing that, like me being as a holding company, doing services to manage this other service business in terms of payroll or any tax advantages of doing it like that?
So typically the reason why, great question. Typically the reason why people will set up a holding company is if they're a medical practice. So some medical practices, like certain franchises, that it has to be, a doctor has to be involved. And so they have to have a PLLC. So they have to have a professional company that has a doctor, and then the doctor, is involved, gets management fees from the practice, like when you see Botox and so some of those things. May I ask you what industry the service industry is in?
It's actually that it's a medical school that teaches students aesthetics for them to be able to pass their state board exam.
Fantastic. Okay.
Mm.
So we see people set up holding if there's licensing issues, or if you have to have a doctor that you're paying, and the way to pay the doctor is through management fees outside of it. Also, we see people set up holding companies if you're looking for liability protection. So if you're looking for liability protection, then it works. And also if you're looking to build, say, 5 or 10 centers, and so you want everything to flow up a little bit. So in the holding company, you're gonna have all of your like major G&A, your accounting, your efficiencies, marketing, that's gonna go over a couple of locations. And so then you have each one of the individual locations pay a management fee up to the parent, and then that works. So when you do that strategy, there's also some tax benefit strategy. When you do that strategy, there are extra costs to it, because you're going to pay annual report fees for each entity. You're going to pay individual tax returns for each entity, and you're going to need accounting done for each entity. So you're going to get just as much of a tax write-off if you're a single location, you're owning the single location with the organization, like an S corp, and whatever the profits are by being an S corp, you're going to be able to write off, all the things you want to write off, car, phones, and all that. Now, if you're buying this company with partners, then there's a benefit to each partner owning their own entity, and then the company that is the revenue producing company feeds up a management fee to the two partners, and then the two partners can write off their expenses any way they want. Does that answer it for you, Manuel?
Yes, I think so. Just adding to what you just explained, the main reason why I'm doing it is for anonymity and also for protection. But I guess, for example, what I was thinking is of having a third S corp that will be more like employee services. So what I was thinking is to have all the employees hired by this entity that will actually offer the services of the employees to the school, for example. But I guess the question is, if I am in the holding company, do I get paid by the holding company, or I get paid a salary by this S corp that is actually gonna offer employee services?
No, because you're not really an employee, you're the owner.
Oh.
So you can be paid either way. You could be paid a salary, from the other company. But if you're going to do it that way, and I'd really consult with a tax attorney as to the reasons why you want to structure it, because you're gonna end up adding, call it, instead of one tax return, our tax returns are $1,200. And they're a little bit more if you have Schedule E's and some other things on it, but the tax returns for the most part are $1,200 for a corporation. And if you're going to have 3 corporations, you've added, 2 more tax returns. And if you don't do monthly, the one that's bringing in the revenue, you absolutely should do monthly bookkeeping by a professional because they're going to maximize your tax savings. And then you're going to still need to finalize the books and do, reconciliation to bank statements and the other. So now you're adding some complexity to 3 different entities, 3 different bank accounts for each entity, 3 different credit cards potentially for each entity, and managing expenses. And so, do it if the business is going to become a 10, 15, $20 million business. But if the business is going to be more of a lifestyle business where maybe it's, doing $1 million, $1.5 million and throwing out $400,000 or $500,000 to the bottom line, then I would say consider how much complexity you want in your life for it.
Thank you so much, Leila. Appreciate it. Thank you.
My pleasure. Allie, I think there was some questions in the chat. Any others that you have?
Yeah, we have one asking, can you expand on how small businesses might determine which 3 KPIs are most critical to their specific industry or business model?
Okay, great question. So how do you figure out what 3 KPIs? So the first thing I say is look at what stage gate you're in at a company. Are you a startup? Are you scaling? Or are you mature? So based on where you're at your stage gate of your company is going to play in. And if you're just getting started with KPIs, the 3 KPIs that I love that I think are extremely meaningful that pave the way for your business to hit the next stage gate is you have to understand revenue is 1. You need to figure out that flywheel of the revenue engine, the revenue cycle of your business. Now, some businesses, don't have a seasonality to it, or they're not cyclical. And so they're going to see a smooth line, heading up and to the right. Some businesses are going to have chunky growth, right? And so what you want to watch is that trend line to make sure that it's moving up and to the right. And so, that where it dips in the same months each year. So you can plan for it. And then year over year, you show that increase. So revenue, number 1, there's a saying, sales solves all problems, and it's absolutely true. And then I would say that you want to look at 2 things related to profit. You want to look at what's your gross profit margin, which gross profit margin means what percentage of each dollar goes to being able to serve that dollar. So for us, because we're in the accounting space, right? So we do monthly P&Ls and we do tax returns. Our direct labor is our cost of sales and the software related to it for us to perform the product that we deliver, right? So in order to perform tax returns, we use UltraTax. They charge us a lot every month, and that software. And then we work in Xero and QuickBooks. So you have to understand what's your gross profit margin, and then how does that rank across your industry? Are you in line? Do you have work to do to tighten that up? And if you have work to do to tighten it up, you have to look at your pricing model, and you have to look at the cost that you're paying for the goods. Whether the goods are people, because people are what drives your product, or if it's actual product that you're buying that sits somewhere, in a warehouse to be delivered. And then the third one would be net income. At the end of the day, if you don't have profit falling to the bottom line, you have a hobby. And, businesses, in order to thrive, need to have profits. And some people are like, oh, I'm happy if my business, breaks even. No, because how are you going to give the team that you employ the opportunity to grow and to thrive and to build, a career with you? And so businesses have to make money to invest in growing. So 3 KPIs. Some of the KPIs, to think about as you go down the path are, cost of acquisition, how many customers you have. There's so many KPIs that you can look at in a business. How long they're with you, do they like you? Those kinds of things.
Following up to that, we did have a question asking, what is the best resource to find industry comparisons for KPIs?
Best resource to find industry comparisons for KPIs. You know, look, you can do Google, but when you do Google, it's going to be based on SEO and who wrote a great article. Industry comparisons for KPIs. So first, I would recommend reading a book on KPIs to understand KPIs. There's a book by an author named Doerr, Doerr, and he's got a great book on understanding KPIs. The second piece that I would look at is I would probably go to SBA.gov, which is a wonderful site that gives you a lot of information on small businesses, and I would look there. And then I would also, over you Googling it yourself, write a very well thought out prompt in ChatGPT and, describing what your industry is and at a high level. So don't get down into the details, but say, I am a fast casual restaurant that sells burritos. And, what are the major KPIs that I should be interested in doing for my business? And, write a prompt that's going to be a couple hundred words. And the more you put in there, the more information you're going to get back. And I would do that over Google. That was a tough question, whoever asked that.
We do have another one. This one is asking, I'm cash flow positive. Should I take advantage of loan opportunities and invest my cash? Or should I use my cash for my business?
Great question. All these questions have been great. So thank you guys. And thank you for staying. So everything in life and in business to me is a math problem. So it really is a math problem. Right now, you can make 6% on your money pretty easily. So if you have $100,000 and you're earning 6% on your money, that's going to be $6,000 a year. And so you have to look at the cost of capital. If you find a favorable vendor that will do 30, 60, 90, or 12 months equal payment to pay it off, then take advantage of that, right? So now you're using other people's money as your loan vehicle. If you can find a loan, say with multifunding, and the loan is coming in at 4%, then you have an arbitrage of 2%, then take the loan. So it really comes down to how does the math play out? What can you do with that money? If, maybe it's not a positive result, maybe it's a net neutral, or maybe it's going to cost you a little bit on it. But if your business is cyclical and it's better off for you to hang on to your cash to take advantages to buy, inventory that's going out of date, or something where you can, get a really great deal from a vendor, use your cash for that and take a loan, because that's going to add more to your bottom line than not having the cash and not being able to take advantage of that opportunity.
All right, we have another one. At what stage should a business assess whether the S-Corp tax strategy suits them?
At what stage? They should assess that the minute that they're making more than $40,000, if they're paying themselves $40,000, at that point, move to an S if you see it's going to grow, because anything over that, don't take as payroll. You take that as reasonable salary, and anything over that, you're going to take as distributions and only be subjected to income tax and not to the other. Perfect. Allie, was there any other questions?
Yeah, we do have another one in the Q&A box. This one is asking, what are the most common mistakes in how small businesses manage their cash flow? And what are your top recommendations for avoiding these pitfalls?
Top small business owners' top mistakes. Well, I'll tell you, there's a couple, and it depends again on your stage gate, right, of your business. So number one, in the early days, what we see business owners, and look, all of us are business owners that are on this call today, and all of our friends are business owners, right? Because that's our tribe, and we find that if we were architects, most of our friends would be architects because you meet them through business. So what happens is early day, they will fall into the bank will say, oh, you should open up account for this and that account for that and account for this. Oh, no, 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 no. Simplify your life. So small business owners, stay simplified. So, you need to have an account. Typically what I do is I have an operating account and then I have a separate payroll account because I don't want somebody having, the accessibility to pull money from a bigger account. Your operating account should have more money. So have an operating account, have a payroll account. If you have a lot of money in the business, then have a money market account. So you should have 3 bank accounts. Have a credit card for your business and do not commingle. We see people commingle money all the time and they're going back and forth and all they're doing is adding complexity and cost and they're going to miss out on incredible tax savings. When their books are clean, then you're going to be able to really maximize your tax savings. And if you were ever audited, you wouldn't have to worry about it because your books are clean. So no commingling, simplify your life. That's early day, strong practices. As your business builds up and it starts making money, I see this over and over. 50% of all small business owners are embezzled. And the reason why they're embezzled is because it's super easy. We live in a digital world. And so you have somebody that is paying your bills. And when they're paying your bills, they could easily, and they have access to your money, easily, they can spin up a little company with a name and they can put in invoices and start paying those invoices that turn out to be them. I can't tell you how many friends that have been embezzled. So do not outsource paying your bills. You could use technology where you could use bill.com or a couple different other software packages to where somebody is keying it in for you, but you must always be the final sign off. And in a digital world, it's super simple. I don't pay any bills that I can't see the backup to it and understand why we're paying that bill. So those are a couple of, I could go on and on, but those are a couple for you.
Great. I did a quick little Google search. Was that book called Measure What Matters?
Yes, it is. Measure.
All right. I'll send that in the chat if anybody wants to get a copy of that.
Is that John Doerr?
Yes.
That's John Doerr? Okay, great. Yeah.
Yes.
And they're talking more in the tech space about KPIs, but look, the same principles apply. We all do the same thing, right? We have money coming in, we have money going out, and we hope at the end of the day, there's some money left behind. And so we can continue to build our business and be efficient. And, when you measure something, it counts and then you can make a difference. You can impact it. As to Rachel's point, by measuring in the business, she can impact how many people, the throughput of patients. And that's what will increase their sales. So are there any other questions? Is there any other thoughts that anybody has that they'd like to ask? And if not, we'll say goodbye. And I've enjoyed my time with you.
Yeah, well, thank you so much. Those are all the questions that I have in the Q&A. Oh, I see we have someone unmuted. You can go ahead and ask your question.
Hi, it's me, Manuel, again. I do have I like to probably hear more about your company and your services. I definitely require some help in many areas in accounting and also bookkeeping. So I don't know if you have maybe you can share your contact details, so probably I can schedule a call. Maybe we can talk more.
Absolutely. Manuel, we will, in fact, I can put in the link on our website. I'm going to put in the chat our website. So on our website, Xendoo.com, and I just put it in the chat. So there's a bunch of buttons to schedule a consult. For me, I'm traveling. My niece and nephew are graduating college, so I'm traveling tomorrow and Monday, and usually my days are stacked. But I have an extremely capable team that love talking to small business owners and will help you. And if there's something that you have that they can't answer, they'll bring it to myself or they'll bring it to my director of tax, and we're more than happy to get on a quick call and talk through it. Would love to have you as a customer, and congratulations on building your business and buying this new business that I'm sure you'll be very successful with because you're being thoughtful about it. You're on this call today, you're doing your research, you're understanding, and you're thinking through how you want to build your business. So kudos to you, as well as to everybody on the call today.
Thank you, Lily.
Thank you. Is there anything else, any other thoughts You know, I can give you a quick high level. You know, we do monthly bookkeeping where we deliver profit and loss and balance sheets. We do that through weekly bookkeeping, where we have a view-only access to your bank and credit cards, and they feed into Xero or QBO. We work in both. And then we deliver to you very valuable data insights into your business, not only your financials, but we have a dashboard, and we have both a mobile app and a desktop portal that you can schedule calls with your accountant. You can call your accountant from it. You can send an email right out of the portal. You know, a lot of the reason why we're changing the accounting industry is that accountants, you know, historically haven't been very responsive and timely to give small business owners the financials that they need to be able to thrive and grow their business. And so we want to change that. We're in 48 states, 13 countries, and our pricing starts at $3.95 a month. And we have packages at $3.95, $6.95, $9.95, and then custom packages from there. And we have businesses that are anywhere from a couple $100,000 a month when they're a professional services business selling time, all the way up to about $50 million. So thank you all for being on the call today. Ali, thank you for the opportunity for us to share some insights with fellow business owners, because, you know, we're the backbone of America, all of us.
Great webinar today. Thank you so much, Lil.
Thank you. Have a wonderful day. Thank you all for being on.